Happy Friday, and thanks for joining me today for the latest weekly market insight series directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. Of course, as always, let's just get right to it. It has been a roller coaster ride for markets this week. On Wall Street earlier, stocks looked to bounce back after suffering losses due to a tech stock sell-off. Treasuries have been up and down as investors digest the week's economic data releases. Also, there have been numerous speaking engagements from Fed officials where they seem confident that inflation is heading down, but offering no timeline for rate cuts. Most traders are pricing 2 rate cuts this year, with the first one expected this September. U.S. consumers showed resilience last month as retail sales were unchanged in June after a 0.3% upward revision for May. Economists had predicted a 0.3% decline. Retail purchases, excluding motor vehicles, rose 0.4% last month, a larger gain than the 0.1% consensus forecast. The data shifted from the recent trend, which showed a gradual slowdown in consumption as Americans feel the pinch of high interest rates. Housing starts in the U.S. increased by 3% to 1.35 million during the month of June, driven by a 19.6% jump in multifamily constructions. Single-family housing starts, which account for the bulk of home building, dropped to an 8-month low after falling 2.2% to a seasonally adjusted annual rate of 980,000. Building permits rose 3.4% to a 1.45 million annual rate, but fell by 3.1% when contrasted with June of last year. Recent signs of cooling inflation led to falling mortgage interest rates for the week ending July 12th. The average 30-year fixed rate declined to 6.87%, the lowest rate since March. As a result, MBA mortgage applications increased by 3.9% last week. Refinancing activity was responsible for the surge as applications surged 15% from the previous week, while also climbing 37% from a year ago. On the other hand, purchase activity declined 3% week to week, while also falling 14% when compared to the same week last year. The Fed's Beige Book survey released on Wednesday showed that U.S. economic activity seemed to soften in the past 2 months, with 5 of the Federal Reserve's 12 regions reporting flat or declining activity. Initial applications for U.S. unemployment benefits rose by 20,000 to 243,000 for the week ending July 13th. Continuing jobless claims increased by 20,000 to 1.87 million for the week ending July 6th, reaching its highest level since November 27th, 2021. Continuing claims have now risen in 10 of the last 11 weeks. In international news, the European Central Bank left its key interest rate benchmark unchanged, as expected amid ongoing concern over inflationary pressures. The decision leaves the deposit rate at 3.75% after the central bank cut rates by a quarter point. And that's it for this week. If you like this video, please hit that like button. Join me on Fridays here to stay updated with the world news. Our trading desk will have the latest information about our pricing incentives, so stay locked in so you never miss out. Have a great weekend, everyone. Buffy, out.